start our first conversation for the morning, and today we'll be looking at a special report by Ernst & Young issued for this year's World Economic Forum on Africa, titled Africa by Numbers, a focus on Nigeria. And I'm being joined on the program by a regional partner with Ernst & Young, Mr. Henry Ibiki. Thank you so much, Mr. Ibiki, for coming in this morning.
Thank you, Harriet.
Now, over the past 3 years, Ernst & Young has done an Africa attractiveness report and have highlighted the steady rise in Africa. Now there's a fourth one. Is the growth trajectory still the same as what was seen in the previous reports?
Absolutely, yeah. The growth trajectory remains. Africa is seen as a very attractive market for investors. That remains clearly. But this year, what we've done is we've done a special focus on Nigeria on the back of the World Economic Forum, Africa coming to Nigeria. And what came out very clearly from that report is that Nigeria continues to be a very attractive destination for investment. We've seen that between 2007 and since 2007, foreign direct investment into Nigeria has grown at a compound rate of about 20%, which is huge. And not just that, I mean, the big revelation from that is also the fact that Africa received the highest foreign direct investment into Africa. We came to about, in terms of capital value, so it came to about 11% of all the investment into Africa came into Nigeria.
Okay.
And that placed Nigeria as the highest recipient of foreign direct investment in the whole of Africa. But by project, Nigeria ranked second to South Africa in terms of number of projects, number of foreign direct investment. So all this investment
is still despite the fact that we have the challenges that we're grappling with at the moment, the security challenges, the fact that we have we're still trying to address the power supply, and there are of course infrastructure challenges.
Yeah, what that just tells you is the potential of this economy. In spite of all the challenges, as you noted, we are still very attractive to investors. But it just tells you the multiplier effect that will happen if we're able to deal with these challenges. It's a huge, market, 174 million people. That just talks directly to consumer demand. The opportunities are there in the infrastructure space, even though for us we see it as challenges, but to investors it's a big opportunity.
Yes, if you want to make any gains anyway, you have to take risks.
Absolutely, and the risk here, it's about, investment is about risk and return. The return on investment in this country, outweighed the risk. What we tell investors outside Nigeria, in terms of how the opportunity of going outside Nigeria to talk to investors, what we tell them is that the risk of not investing in Nigeria is actually higher than the risk of managing, doing business in Nigeria. And that those that are not in now, we actually have to come in later at a premium. They have to pay a premium to come into this market.
So, Mr. Ibiki, the report also highlighted the fact that there's still this perception gap between businesses who are here and businesses who are outside seeking probably to come in. Why is that gap still there?
Yeah, it's a perception issue. That's what we talk about telling stories. Nigeria has to tell its own story. The progress that we have made, is not really reflected. People out there have not seen the progress that we made. You have to be in this country to see the progress that we made, to see the reality on the ground. So the perception from the news, international news, what they hear is different. If you are outside this country today, you talk about security. So you think that Nigeria is at war. Nigeria is not at war. You are now here doing our business. Companies here are going about doing their business. But security is a concern, and we're dealing with it. But it's not as volatile as they hear out there. But they need to come here, to actually appreciate what's on the ground. So that perception, still remains. We saw that very clearly, and that's why you see the difference between those that are already doing business here and those who are not yet. Those who are not yet here don't want to come here. They see the risk; it's just too high for them. But those that are here, they see the opportunity, they see the returns, and they found that they are able to manage the risk and still generate a high level of returns, higher than what you can get in most of the economies elsewhere.
So now, how can this now translate into this robust and inclusive growth that we're hoping that Africa, let's talk about Africa first, is going to begin to have in the not too distant future?
Yes, talking about inclusiveness, if you look at in the recent years, we're talking about Africa on the rise. Africa has recorded an average growth rate of about 5%, higher than any other economy in the world. But the challenge is this: this is not aligned to the prosperity of the people. Many Africans are still living below poverty line. If you take Nigeria, for instance, the same thing. Nigeria, the base GDP numbers, places Nigeria as the largest economy in Africa. I mean, if we look at the numbers, we've grown by almost, the GDP has grown by almost 89%. But if you see the ordinary mind on the street, has that reflected on the level of prosperity, standard of living? Has that reflected? Absolutely no. That has not reflected. So the theme for the welfare, which is what you refer to about forging inclusive growth, yes, and creating jobs, is just apt. Africa has recorded this high level of growth, but how do we make this growth to be inclusive? And inclusiveness is about poverty alleviation, creating jobs. It's about distribution of the wealth, because most of the African countries, most of the revenue comes from commodity products, commodities. In Nigeria, for instance, we've depended on oil and gas for so long. And all we have been saying that we need to diversify the economy and ensure that with the revenue from oil is invested in other sectors. But we are seeing that happening now, because from the GDP, the rebase number, we see the contribution of the non-oil sector. We see a massive lift in that space, that the non-oil sector is contributing massively to the GDP.
So now